The bear market rally, and that's what you call it, and that's significant, but it has legs, and that might be significant too, but still a bear market rally.
Yeah, it still looks like it to me. I mean, we have all the short-term gauges pointing higher right now, but the long-term gauges still do point lower. And there's not a lot of breakouts with this move as much as it's been impressive off of that sort of late September, early October low. I think what we've had here is really sort of a macro shift that's driven this relief rally. And it was very similar to what happened over the summertime where we saw the S&P 500 peak in mid-August. The 10-year Treasury yields had been correcting ahead of that peak for really several weeks. So I think we're probably in store for something similar this time around, where the S&P 500 will peak on the back of a short-term low in Treasury yields. And I don't think we have that low yet.
The crypto is on everyone's mind, on everyone's lips, everything else. Katie, you think you're surprised that I guess that it stayed somewhat localized, and this is positive seasonally for crypto? What do you mean? This time of year?
Yeah, I mean, the time of year is sort of positive seasonally for risk assets more broadly. And I am surprised that more damage, quite frankly, wasn't done to the charts of Bitcoin and Ether last week. And yet for Bitcoin, there is a major breakdown that would be confirmed this week on a close below 18,300. And unfortunately, the next support level is below 13,900. So that's why it's significant, because the drop to the next support is really, really very far. And of course, you know, it's easy to make a case for that breakdown. And yet we have some counter trend signals that lead us to want to at least wait for it, give it a chance to come back this week. And we say that because the DeMark indicators are showing signs of downside exhaustion for Bitcoin that we haven't seen in some time. And in fact, on the weekly chart that we haven't really seen since this bear market cycle began, that would support a rebound of 9 weeks or so for cryptocurrencies. And whether or not that allows Bitcoin to avoid its confirmed breakdown or not, we're not sure. But, you know, it would be at least a relief rally and something that I'm sure a lot of folks would be welcoming as a selling opportunity.
Katie, what are the exhaustion things that the things that are exhausted? Just to understand it.
So the DeMark indicators, these are essentially short-term counter-trend signals. It's an overbought, oversold measure that we're using. So we're gauging something that's exhausting to the downside, basically where selling pressure just dries up. So that's what it's indicating here. And yet we really need proof, right? We'd always give more weight to a breakdown than any kind of oversold reading. That's almost always the right thing to do. So in this environment, we're going to be treading very cautiously with that.
So it still has to do, obviously, with the 10-year. That was an interesting move on Thursday, too. What does that? Yeah. What do the charts say about the 10-year?
The 10-year yields are working off the opposite signals that we have now in Bitcoin. So I think that's kind of interesting. And for the 10-year, we saw yields come into their 50-day moving average for the first time in months. So it's not insignificant, the loss of upside momentum there. And yet we're still viewing it as a corrective phase within the context of the long-term uptrend, which we ultimately expect to resume. So we're looking for yields to come off a bit, very similar to what we saw into that sort of early August low, sort of a corrective phase, somewhat modest in terms of downside. We have support initially 3.5 and below that around 3.25, after which the uptrend should take hold again.
So back to the terminal rate that you've always signaled, that's still in play?
That's right, yeah. So we're still looking at the same levels. And those support levels are sort of round numbers in a way. They would hold maybe some psychological significance too. So it'd be natural for them to turn around there.